Good afternoon, guys. What's going on, everyone? What's going on? Definitely a flip of the script from what we saw yesterday. I think that has to be said. Definitely, we saw a little bit of a rally yesterday, but that was more so because we were in oversold territory from yesterday. But that was definitely a 360 from what we particularly saw yesterday. That market sell-off just intensified and rather quickly within the first roughly about first 20 to 30 minutes of market open, that really just started to get ugly. And once it passed about roughly what the first 45 minutes, it kind of painted the picture for the rest of the day in terms of being a flip of what yesterday's day was. We saw it be a strong trend day, but to the upside yesterday. Today was a rather strong trend day to the downside. It's basically the bigger picture. And if we actually remember, kind of just drawing back to yesterday's kind of thought process, is that we saw the downfall from Apple rather earlier on from when they had the news about the lack of demand and cutting their production. But what that didn't do yesterday was we saw a little bit of a pretty much a recoup, a little bit of trying to recoup those losses that they had roughly on pre-market yesterday. But then come today, we ended up having a downgrade of a BOFA securities this morning, and they actually cited the fact about that entire demand reduction in the demand. So that's what ended up being one of the highlights that started the morning. Once I started to see the markets begin to roll over, I saw looked to Apple. I saw the downgrade. I saw the levels of. We obviously talked about it yesterday. I believe someone actually came on live here yesterday, if I'm not mistaken, Eddie, talking about that key 145 level, as I did mention it. And then I kind of touched bases on one of the EMAs off of the weekly, which I'll see if I recap Apple's chart. And so that was one thing that I was just going, playing it level by level. That was one that I actually did analyze today, and it did tell me that there was going to be further downside. And then right behind Apple, we saw Tesla just that was just a disgusting rug pull that we saw out of Tesla. Gave back that little $4 to $5 move that I had yesterday, and that was a name that ended up being a disgusting rug pull today, down almost about $20. So that's another name that once we saw Apple give out, then you start to look to Tesla. Tesla gave out, and then both of those indications with Microsoft following right behind, that gave me all the indications of knowing that this was just not more so geared towards tech in terms of on the sell-off. It was a broader market sell-off, and that's particularly what I took. Uh, Rather earlier on, what I was able to pretty much distinguish. Just looking at different sectors, looking at what was leading the way down, that's what gave me that indication that this was going to be so much of a broader market sell-off, as it pretty much started within the first 20 to 30 minutes of market open. All right. So that's just giving you kind of just drawing conclusions of what we saw yesterday and what I saw earlier on this morning. As I do get into futures, we are still roughly within this little megaphone. It is an hourly megaphone that we're sitting in right now. As of yesterday, when we were last speaking, we were basically close enough towards the 200 EMA on the hourly chart, and we were pretty much wicked our resistance right around this 37.44 mark, as I was mentioning yesterday. But we were never able to retest that 37.44 level on futures. And so once we did, we pretty much saw a nice little consolidation. And then by morning, we saw basically that little drawdown as we had, now I want to say a meltdown, to put it more nicely. All right. So that's basically what I ended up seeing. We had a little distribution, little consolidation, and we got the rug pull overnight. They didn't even let us retest that 37.44 level on futures. We saw just that nasty rug pull. And so what I'm inclined to say now is that obviously you saw the bounce that you got into the end of the day here. That was basically something that I wouldn't say I anticipated it because I expected it to be much weaker. I basically forecasted the fact that we were going to get somewhat of a bounce as I saw us going into power hour. I did not particularly anticipate that it was going to be as strong as it actually was because of just how much that selling pressure was. I think at one point in the day we had about a 5 mil put order that came through on SPY. And if I'm not mistaken, just off of recollection, it was dated out for November. There was another $1 million put that was out for next week. So it gave you those signs that the selling pressure was just continuing to intensify, and to drop $1 million within a week expiration is rather bold. So that's just picking apart all of our flow alerts, seeing all that flow that's coming in, dissecting the fact of whether it's something that's maybe a hedge, whether it's actually something that trends with the market direction that we're actually in just witnessing right now. So that's just giving you the mindset of what I was looking at as well. Wayne, appreciate that compliment. Definitely appreciate it. Always here for that. If anything, you can always DM me or kind of tag me in Discord. Those of you who are in there. So that's what I was actually looking at for ES. Now, again, kind of getting back into going into tomorrow. Obviously, we're closing in on the end of the week here. It's also a end of a quarter as well tomorrow. So we are going to see a lot of rebalancing tomorrow. For a lot of the big guys on Wall Street, a lot of rebalancing. They're going to be pretty much repositioning themselves going into what's going to be starting our next earnings season here. So that's going to be something that it's going to be a little interesting tomorrow in terms of the whole rebalancing. I'm I would say that I am favoring the downside here. But usually when I've typically seen the rebalancing, there's not as much drastic price action. As we kind of just see we witnessed a meltdown that we saw today. I haven't necessarily seen that we ended up getting a drastic price action in one way or the other in terms of direction once we see rebalancing starting to happen here. So I'm not expecting too much of a drastic price action compared to what we saw today in terms of just a meltdown. But we're going to see a lot of those repositionings that are going to be setting for the earnings. It's going to be interesting to see if how the repositioning is going to be. No, obviously we're not going to know ahead of time, but if that repositioning is actually setting up for a end of the year rally, meaning that we're near a potential short-term bottom on the market as we approach earnings, we approach the end of the year, are they repositioning for a short-term rally, or are they still positioning for the fact that the market is going to continue to nosedive? That's what I'm actually more interested to know. Only time will tell to kind of get those results of how the big boys are positioning, obviously. But that's what it's actually a little bit on my mind as well that I wanted to point out. Wayne, next week green. I would anticipate that we would see the market green. I do believe that we're due for some type of multi-day rally. Necessarily, we saw one day little capitulation yesterday that we had a nice little trend day and giving it all back. We saw that wasn't necessarily a lower low today, but we saw the market sell off just continue to persist yet again, giving back most of all of yesterday. So I would anticipate it. It is hard to say. I would particularly say that maybe that's a question to possibly ask me tomorrow to see how the week particularly closes and what level we close. And if anything, you can probably DM me in Discord, like I mentioned. All right. Jesse, I will get to Apple. I know that was one that we actually covered yesterday, so I will definitely get to that. Veer, how are you? HD, I will definitely get to that one as well for you. All right. So, like I mentioned, I kind of cut myself in and out, but I didn't get to the levels. So tomorrow morning, I'm going to be watching to see if we can retest this level that I had as a support. It's roughly around this 36.75 mark is what I'm going to be looking for. And that's pretty much lines up with roughly your 20 EMA off of the hourly here. That's sitting exactly at 36.72. So 36.72, 36.75, that's the range that I'm looking at for tomorrow. If we do get any kind of continuation off of that end of day little bounce, little recovery that we had, I'm looking for 36.72, 36.75 for the upside to test the resistance, in which now I'm going to actually determine do we end up building a base over that resistance to see continuation on this recovery, or do we end up rejecting that 36.75? In which case, I am still in the mindset that we're going to end up taking these lows out from what we had as of yesterday morning, sitting down below near 3600. Okay, so that level that I'm watching, 36.72, 36.75, I do think that's going to be particularly a big level in terms of this recovery continuing. Otherwise, I'm going to be watching for that range to particularly reject. And the circumstance of making a lower low from yesterday morning is not out of the equation. As we saw, the market basically gave back all the rally we had yesterday. I would not anticipate that we see so much of a recovery to the upside just yet tomorrow. And that could play into the factor of what Wayne is saying about next week being green. That is not entirely out of the equation. If we can try and build a base at least to where we made lows today, that is entirely possible. That if we could build a base here to close out the week, that we could see particularly the market give us a nice little bounce going into next week. All right. So that's looking at futures. Quite a few tickers you guys kind of just put out there. So let's see if we can kind of go down the line as I kind of go through most of those. First one on the list was Apple. Let's take a look at Apple, see what's going on. One thing I will start off with on Apple is particularly looking at the weekly. I think that does give you the bigger picture of Apple, because the one thing that actually does stand out to me, and I believe I mentioned it yesterday on our live here, was that you basically see that blue line, which is sitting roughly right around your 100-day EMA. That was actually exactly once I saw it start to break that 145 level. That was the level that I was particularly watching, was that 100-day EMA off of the weekly chart here, and that was sitting at that 141 half. Those of you that were listening on live this morning while we were trading, that was actually the level that I did mention this morning. I was watching it down towards 141 half. So as I started to see the breakdown below 145, I believe we were hovering for I want to say a few minutes, maybe an hour or so, around 143. That's how I had the indication that it was going to make about another $2 move to the downside. And we ended up hitting that EMA pretty much right on the nose. So 141 half, obviously you see that we were basically able to recover and close above that EMA. Now, I would anticipate that we hold this EMA at least until the end of the week here to close out tomorrow. So upside I'm watching for is up towards 145. It's not out of the equation that we could retest the low that we had off of today from that 140.68 mark. I would not be surprised that we don't retest it by morning if possible. But then I would anticipate if that be the case, maybe we see a red open tomorrow morning and we see a slow onward recovery and we can make our way up towards the resistance I have sitting right around that 145 low. Okay, so that's what I'm gonna look for. Obviously, I would anticipate we're gonna hold 141 half at the very least off of that EMA, and we'll pretty much see the week close out above that 141 half. All right. So that's what I would look for with Apple. I think it all just pretty much plays depending upon whether we see a nice gap up, we get close enough to that 145 at the open, and then we look towards the downside, or do we open up closer to the low of the day that we had today, and we see the market give us a slow onward recovery through most of the day. Okay, so that's Apple. The other one that Veer, you mentioned HD. Let's take a peep at HD. If I recall, this was actually still another one of the plays that I actually saw from last week off of the newsletter that I had. So going down to the 4 hour, one quick second. Sorry, guys. Okay. So going off to the 4 hour for Home Depot here, kind of expanding this chart as much as I can possibly here. What I basically see is as of piggybacking off of yesterday's price action that I saw on this one, we had the nice little descending broadening wedge action playing out on the 4 hour. We had the head and shoulders that did play out. We saw the breakdown below the neckline, took us right down. That was dating back towards the 14th. We had a little bit of a wedge action start to build out, and we had the retest of that neckline. And as you saw, if I actually zoom in as much as possible here, if you notice, you actually went ahead and you retested that neckline off of that head and shoulders, but you rejected, and you can basically see that breakdown that we had retesting that little wedge off of this little retest. So that's basically what I wanted to point out. You had the little retest off of today's price action. You had the bounce into the end of the day, which basically solidified your support off of the wedge from breaking out previously. And so I would look for the upside here to possibly retest. Of course, big level to retest here would be roughly 281 half. If we can break over 281 half, then your full on breakout would basically be over 283, and we can see a further upside, pushing up towards 289. Otherwise, if we can't get the break over 281 half, that would pretty much be plausible that we end up retesting the support right back down towards 275. And if you see, if we break down below 275, you can basically see that there is a nice gap fill awaiting here within that wedge. If I just kind of highlight that real quick, you see that there is a wedge sitting, a little gap fill sitting right there. So below 275, I anticipate that that's going to be a full-on gap fill, and 270 puts would actually do pretty darn good work there if we break below 275. But this is a little bit of a tight zone that you are sitting in. Ideally, if you don't have a position on Home Depot yet, me personally, I would wait to see if it ends up retesting 281 half, and then you look for the upside for the bigger upside play. Otherwise, to the downside, you wait for the 275 mark to break, and then you can play the downside towards completion of the gap fill. Okay, that will basically be the two different ways that I would look to play it. Otherwise, this is a tight zone that you're playing between support of the wedge that you broke out and the neckline of the head and shoulders that you already tested as a resistance. So not too much of a room that I would say in terms of trying to get the bigger move off of Home Depot. Okay. Let's see, going down the list, Veer, I already covered Apple from Jesse. Pramod, you mentioned AMD. Let's take a peep at AMD. Let's see what's going on. All right, so let's zoom out, of course. I'm going to go out to the weekly, and then we'll kind of zoom in on the time frames here, give us a little bit of a bigger picture. So of course, bigger time frame, we already broke below the 200 EMA. That'll be something that at some given point in time you would anticipate we're going to test that 200 EMA as a resistance at some given point. So big level to remember would be that 75.74 level down the road, of course, to retest that 208 EMA. Now, as I pretty much the bigger level that I have my eyes set on in terms of the bigger picture, the bigger view, where I particularly want to go more so long for the long term, I want to say. The bigger level that I would be watching for is still roughly around that 59 mark. That basically is points out the resistance that we tested dating back towards February of 2020, again April 2020, and then June 2020 before we initially took launch and we saw the stock start to break out. So that 59 mark would be the level that ideally I would hope at some given point, whenever the market decides to find a particular bottom, 59 would ideally be the bottom for me on AMD to particularly go long, to get shares, to get leaps, whatever may be the case. So ideally, that's the bottom that I'm particularly watching on AMD to give you the bigger picture. Otherwise, as I get down towards the daily, to give you a little bit more of a shorter term aspect on this, I would say that you actually particularly have the gap fill that's still quite incomplete. You got close enough to that gap fill, but you do have that gap sitting down towards 62.33, which was not yet completed. So 62.33, I do believe that should particularly be filled by morning. It could be in sympathy to the fact that Micron's earnings this afternoon, I believe their total revenue that was pretty much forecasted came in under what was previously forecasted. So that could be a reason why we see AMD maybe fill that gap to the few, I want to say about $2 to the downside here, roughly. That'll be something that I'll keep an eye on. But 62.33, we get the gap filled there. Then I can see the short-term bounce right back up, and then level I'll be watching for for maybe a short-term bounce, quote unquote. I will be watching for this to take this back up to a 69.5, and above that you have the resistance sitting at 73. Okay. So that'll be what I would say. Of course, no, obviously I'm saying that you want to see the gap fill entirely completed, and that's what I'll be watching for. So roughly around that 62.33 is where I would say you start to nibble at that for short-term relief. Okay. Let's see, per month. Do you not use log charts? Reason which one is better? I don't particularly use log charts very much. I just prefer not to use it. There are times where I do see myself using it, particularly, but nothing that gives me it sways me one direction or the other. If I'm actually being honest with you, because there's not really too much that one doesn't show you that the other doesn't show you particularly. But it's up to your preference, pretty much. That's all it really is. That it's pretty much up to your discretion. That's like saying for those there's other traders that maybe say they want to use after hours and pre-market activity, so they turn on after hours market price action to get a better price action, but it's up to your preference. Like if I'm not mistaken, I believe Avery at some point, he actually found it helpful to actually use the pretty much after hours price action in his charting. So it all depends what actually gives you a better image of what, pretty much your price action in particular. Whatever makes you see a more visible image, what I would say is going to be more helpful for you. All right. So moving on, I did want to cover. I do believe there was another name that I actually did want to cover. Amazon was one name that I particularly wanted to keep an eye on. This is actually one that I was a little bit interested in. You do have a little bit of a bear flag scenario playing out off of the daily for Amazon. So I was watching that, but it did hold my support off of that 113 mark. So that was something that I was particularly looking for. So 113 is going to be something that I'm going to continue to watch here to see if we can hold that base. Otherwise, you do have a gap fill sitting on Amazon below 111.59. I will particularly be watching to see if we get that gap fill. So if the market continues to pretty much escalate to the downside, I'll be watching for that 113 support to hold yet again tomorrow. And that'll be something if we end up getting a rug pull on the 113. I actually know that there is a gap fill sitting here down towards 111. And then that pretty much goes right into my support, my next level support I have sitting roughly beneath 109.5 is what I'm watching for my next level of support. Otherwise, the breakout that I'm watching for is going to be above this 118 mark, above 118. Then I do see this making a little bit more of a push, and we can retrace back up towards 120 half. Okay, so that's one I'm going to continue to keep an eye on. That'll be another name. Let's see, Annette, you mentioned NVIDIA. Let's take a peep at NVIDIA. All right, so first things first, let's actually get out to the weekly. Let's see if there's anything that actually the EMAs actually tell us. In which case, as of this point, it does tell me that we actually broke the 200-day EMA. So similar situation to AMD. At whatever given point, it isn't entirely likely that we're going to test that 200-day EMA as a resistance. At what point given time? That's the bigger question, obviously. In terms of demand support that I'm watching for, I had a little bit of a zone outlined here for NVIDIA. I was actually watching for this to come down towards that 117 to 118 level. That's particularly the level that I wanted to see this to go long on NVIDIA, particularly to get at least whether it be a short-term bounce or it's actually a potential run-up going into their earnings. That is going to be what I'm going to be watching for the next, I want to say, next few days here as the market continues to hover right around our lows, particularly of this bear market. I'm going to be watching that 117 to 118 level. And that's particularly the level if you don't have a position. That's what I would look for in terms of getting a starter position. Otherwise, if you're looking for the breakout here, I would say you watch for this to basically reclaim over 127 half. I think that's pretty much the range that I'm looking for. Over 127 half, then I do believe that you have a move up towards 133 is particularly what I like. All right, so that's just giving you the levels. Otherwise, if this does end up breaking south of 117, that's not going to be particularly pretty. But the next level of support that's more meaningful isn't going to be down until 107. Okay, but that is definitely a chart that I'm definitely watching. The semis are kind of high on my radar right now. Obviously, we see Tesla and Apple kind of taking the beating in terms of the tech sector. We could also point to names like Meta and Netflix that have pretty much repeatedly gotten beaten up. They were actually probably the first two names in the tech sector that actually took the biggest hit, and with the rest of the names following. But semis have been on a drought right now. I'm going to look to see relatively at what given point we can find some kind of relative bottom for the short term on AMD and Nvidia in particular. So that is definitely something that's pretty high on my watch list. I'm gonna reanalyze it this weekend after the week concludes, and then I will see exactly how I want to go ahead and approach it going into next week. So I would not rule out the fact that it maybe is on the newsletter this weekend. That's maybe something to pretty much look forward to. But otherwise, I think it's a wait and see approach just yet. We're kind of in a little bit of a zone of particularly finding out that we have a short-term support going into tomorrow, or do we see the market continue to bleed, maybe see a gap down tomorrow? And that's what I actually am looking forward to close out the week. All right. But other than that, I think I kind of went through a few things here. Hopefully, I was able to help you guys and assist you guys in certain levels, certain charts that you requested. But other than that, I will conclude today's session right there. Appreciate you guys joining as always. And you